Good afternoon, my name is Jordan Lambert, Market Analyst at Gelatama Management. On the run up to Bernanke's semi-annual report, the market has fixed itself in quite a tightly traded range in the last 24 hours, with the 1290 mark being a central point. On the whole, traders are pricing in a repeat of Bernanke's dovish language last week, and this has weakened the dollar and helped gold hold on to almost all of its gains it's made last week. At the same time, this anticipation has caused gold to become a little range bound, especially within the last 24 hours. And it is likely to stay so until Bernanke begins talking at the semi-annual report at 3 p.m. today. Other big news today is the Bank of England policy member votes on aspects of its asset purchase facility. So this will unveil how many members want to reduce, maintain or increase the stimulus. Recently, the new governor of the Bank of England, Mark Carney, expressed that he is ready to continue with the current level of stimulus. So any committee conflict there will be interesting and will rattle the pound and could move gold, consequentially move gold. Let's just take a look at the charts. Unfortunately, the symmetrical triangle yesterday that I drew here failed to yield a good upside break move. If you had have traded it as price penetrated, you might capture $2 or $3 of profit, but generally I consider this as a failure. And the reason it failed was because the semi-annual report is hanging over the market like a big cloud of anticipation. So the market is simply just waiting to hear Bernanke talk, and also the 1300 level is a very strong technical and psychological resistance. So with hindsight, it wasn't going to make a big move past the 1300 mark, not before Bernanke began talking. However, we do have another triangle that is developing in the form of an ascending shape. This is the top side of the ascending triangle, green horizontal line at 1295, and the bullish trend line also forms the bottom side of this ascending triangle, and this just illustrates the matching buying pressure at the moment. Yes, I have mentioned it's range bound, especially during this period of the last 24 hours, but we can see since last week buying pressure is building because we are seeing higher lows, not in really any higher highs. So that just suggests that the bulls are slowly closing in on the bear's enemy line. The disadvantage to this pattern at the moment is that the breakout line is just under 1300. It's likely to find more resistance at 1300 because 1298.83 was last week's high, and then 1300 is a big round psychological number as well. So it will instantly find resistance at this level. So if you are going to trade this, maybe just take your profits really quickly, because you don't want the market to move sharply against you when it's at 1300. So if we get a breakout before Bernanke talks, look to capture a few dollars. When Bernanke begins his speech, technical analysis might as well be thrown out the window because it will be very volatile. But if the likelihood is that Bernanke is going to reiterate his tone that from last week, and now especially we have had weak US retail sales. He'll probably be speaking on the side of continuing stimulus as long as needed, and he may even find clues that the Fed may postpone the beginning of the wind down. And if this is the case, gold likes stimulus or more stimulus, so it could easily push gold higher than 1300. So traders with maybe larger accounts and could trade this probability that Bernanke is likely to repeat his dovish language, and after the volatile dust has settled, it is more than likely going to settle higher than 1300. But if you don't like volatility and like trading with the technicals, just wait until the volatility has died down and we see some direction. On the bearish side, if we get a break of this bullish trend line, we could see a sell-off. Also bear in mind that we have support levels here at 1273 and 1268. I'll just colour these yellow just so you see the distinction. So as price approaches this yellow support line, because these levels have been highlighted by long shadowed candlesticks, we could get a bounce for some quick profits, but be very wary of trading on a support bounce when Bernanke is talking. Remember that Bernanke's speech is a 2-day event, starting today 3 p.m. GMT, but he's also talking tomorrow at the same time. So it's going to be a volatile week. This is for technical analysis. Be aware that Bernanke is likely to reiterate his tone from last week. Gold is likely to push higher, but it's going to be very volatile. So trade very carefully. Thank you very much for listening to me, and speak to you soon.